Welcome back to the Simulated Trader. My name is Anthony, and today we are examining ocean for oil. All right, so quick recap. Ocean one, we've got bonds, which is the cost of money or the benchmark as far as what do I get paid just for parking my money. Ocean two is gold, the fear barometer. Do I really trust the system, or do I take matters into my own hands and just move my capital into something that I can put my hands on physically? Ocean three is currencies, which is the more economic, stable currency versus the euro versus the dollar. If the euro is strengthening, then we've got more economic growth over, globally, or is the US dollar strengthening and people are putting their capital in something a little bit more secure? Finally, today, ocean for oil. And what we're looking at with oil is really the economic growth globally. So usually, right, when we see oil rising, most of us are thinking gas is going up, life is hard kind of thing. But what it's really showing is that production is happening, right? We want to see oil go up within reason, right? Because that means that manufacturing is happening, transportation is happening, people are traveling, right? Because all of that is oil being consumed. So we do want to see oil growing, the cost of oil going up, obviously within reason, so that it's not a strain on us, at the wallet level. But in concert with the other four oceans, we want it to be reasonable. Now, of course, oil can spike because of other outside forces, kind of like what's going on in Iran right now. Okay, so we've got tensions over in the Middle East. So I believe there's a blockage on one of the canals over there. So now we have a pipeline situation, right? So oil is naturally going to increase. This is just simply supply and demand, okay? Compared to the economic growth that I was talking about earlier. We've got barges crossing the ocean, we've got people flying all over the planet, manufacturing, gas, whatever you want to call it. All of that would be the normal economic growth that we want. So what oil is really showing us is economic velocity. How fast is this being consumed? And it's either a good thing, obviously, when it's manufacturing and the euro is climbing, so there's economic growth. We can fund these different projects. We can invest in these different companies. These companies are manufacturing, they're consuming raw goods, and oil is going up. Excellent, fantastic. We've got the other side of the coin. We've got the Iran situation going on. There's a disruption in the pipeline, so now we've got oil going up, just simply supply and demand. Not good. And then we've got the other side of it where the engine is stalling and oil starts to fall, right? For whatever reason, the US dollar starts to come down. We've got capital being restricted because of safety and or fear. So now the engine is starting to slow down, and now we're not having any kind of consumer manufacturing or anything along those lines, so oil starts to fall. Okay, so again, that's just really high overview, the 30,000 foot view again of these various oceans, the four oceans. So again, I want to make sure that I say this correctly, because I want you to all remember that this is all about making a dollar, right? At the end of the day, this is the market. This is if you remember the four levels of the ecosystem, the four levels of context. You've got the ecosystem, you've got the environment, you've got the climate, and you've got the weather. The vast majority of traders spend time down in the weather. They're only worried about the underlying that they trade. And it goes up or down and it's willy-nilly for whatever reason. They never look up at this layer two of what's going on with the environment and seeing how these oceans are affecting the underlying that they actually trade. So I hope you can put get the idea of what we're trying to do here, as far as, like I was mentioning, the soap opera idea is you're checking in daily. you're looking at the macro board. If you can see my top layer here, that's what it is from left to right is bonds, gold, euro, USD, and oil over here on your right. Um, that's my daily read. What's going on? And as things shift, it's not really a surprise the trickle down effect how it has down on the underlying that I particularly trade, the S&P 500 or the ES futures. So because that's the last domino to fall, right? We have a saying in the simulated trader that capital first has to find a place to live before it can have something to buy, right? So if it's being rotated out of bonds into equities and one of those things, then obviously the euro is climbing, gold is trading sideways, oil is probably on the upswing, and bonds are realistic so that they're down enough that people want to take their dollars and find better risk opportunities outside of bonds. Once everything reverses and people start rotating their capital back into these other assets, what do you expect to happen in the indices, and the stocks themselves? As long as you're paying attention to the soap opera of the four oceans, you're not blindsided. It's not random, and it starts to make a lot more sense. So I appreciate you sticking with me for the four ocean analogy of these macro assets. Next, we're going to start getting into now what, right? And the whole simulated trader and why we're here in the first place. So thanks for sticking around, and I hope to see you next time on the Simulated Trader.